Hey, greetings. Dr. Jeffrey Scott here. This is my Market MRI Pro update for Thursday, October 2nd, 2025. Well, at sundown this evening, I got to eat. Yom Kippur is over, and the market should start to pick up a little bit as those that have been out this week, maybe they come back on Monday. But as I've always said, and I said this last couple of videos, you sell Rosh Hashanah, you buy Yom Kippur, and let's see if the market carries on a little bit from here. Speaking of carrying on, we had another day and more new highs. These are very interesting days. Today opened up higher, went sideways on a lot of news, and then rallied into the finish. But another day with modest upside and a little bit better than 50-50 from a participation perspective. And my name is Jeffrey Scott. MarketMRIPro@gmail.com is my email address. Google Group Top Down Trader, and just launched, still in progress, but website MarketMRIPro.com. As always, this video and all others are in the spirit of education and should not be considered investment advice. The intent of the video is show you how to use my tools to quickly do a top-down analysis of the current markets. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. My Google group is called Top Down Trader. All you have to do is go to Google Groups, go to all, search for Top Down, let us know how you want to be contacted. And the live meeting is coming up 4 weeks away, less than 4 weeks away. It'll be at the Palm Beach Gardens Marriott, um, 15 minutes or so north of PBI. Just Uber there. Cost is $12.50. I'll take care of breakfast, lunch, and dinner on Sunday, and breakfast and lunch on Monday. I'll always have coffee and liquids and snacks available in between the meals as part of the services. And you'll get 2 days, packed days of education and software instruction, as I will show you how I have been trading current markets, how I evaluate them, how I use the various tools, and how I brought or had those gains that I talked about yesterday. $400 rebate from that 1250 can be used on any subsequent purchase, whether it's any of my software products or even against next year's Florida meeting. For more information, reserve your spot. Jeffrey Scott, Market MRI Pro at gmail.com. Seats are limited. On Saturday morning, in 2 days from 10 to 12 Eastern, I'll be doing a live stocks and markets review. I will put the link at the bottom of the video in the remarks section. Know your news and earnings. You know, I guess we don't know what we're getting anymore. My assumption is with the government shutdown, we will not get the U.S. employment report, which sometimes moves the markets on Friday. We did get the ADP. The ADP came in a little weaker than expected on the private sector, and that came out on Wednesday, and that drove the market higher. Um, Still going to get some Fed speakers speaking, but the data is going to dry up, and I think the odds of a rate cut at the next meeting are 100%. And with no data, I don't know how they can get lower. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. And as you can see, light on earnings in the back half of this week, frankly, the entire week. But we should start to see this pick up shortly with quarter 4 earnings. For more information about anything I talk about, again, my name is Jeffrey Scott at marketmripro at gmail.com. For any issues technology-wise with our tools, coding at marketmripro.com will get you Praveen, and consider joining my top-down trader group. Let's go take a look at some charts. You will notice I do the exact same analysis every night. It works. I make decent income. I could quit. I could get it done in 30 minutes or less. So it's been something that I don't bother changing. If we look at what happened in the markets on Thursday, Bitcoin was up 3%. After a rough patch, Bitcoin's up 10% in the last 5 days. The VIX was up as well. And then if you look at the equities, the Russell small caps up 0.64, finishing at the high of the session. The Qs were up 0.41, a little bit above the middle. Diamonds 0.19, closer to the high. The dollar was down 0.13, and the spiders was up, excuse me, the dollar was up 0.13 and the spiders were up 11 cents. Both of those were about the middle of the ranges. So positive day, perhaps volatility is concerning. Over here, the new high, new lows on the NYSE and the NASDAQ, I like to look at the 12-month new highs minus new lows and to see that they're still positive. They came down a bit, but they are holding. I spent a lot of time looking at participation, and we could see here 55% of the stocks in S&P 1500 were up, 54 on the NASDAQ, and 49 on the NYSE. So even though the markets were up, they were not massively up. And what you see is a little bit more than a 50-50 market underlyings. If you look at the S&P 500 sectors, materials, technology, and industrials were the only things that were up. Healthcare was down 0.18, as was utilities, and the big loser was energy and consumer discretionary. We are definitely going through a lot of rotation in these current markets. Performance-wise, uranium continues hot. Look at this over the last 20 days, up 24%. Cannabis is up and down. We have blockchain, fintech, solar, all above 2%. So there are things that are working, but as I said, there's been a fair amount of rotation. We go to our timing model without looking at the weekly or the monthly. I will tell you the daily, the weekly, and the monthly all are in green, which says buy, buy, buy. Now, I don't go short when it's buy, especially with all three time frames. If I start to see the daily start to have some short signals, I might lighten up. Um, I don't short at all-time highs because typically all-time highs beget new all-time highs. So it's dangerous to do a lot of shorting, perhaps when the market's where it's at. But I do lighten up and raise cash as my signals start to change. But I will look at things with breadth and that helps me increase and decrease the amount of cash I keep on the side. Right now, it's hard to have much on the side. It's a super strong market. Look at the week that we're in. If we look at US ETFs, not a lot of change. So let me just say that it's very similar to yesterday. They all were up a little bit. The seasonality has turned positive. When I say all, the spiders, Qs, the diamonds, and the Russell. The Russell has not yet taken out their last new high, but they're close. It looks like we had during the day highs on the spider and the Qs, but since they're also were closed at new highs the prior session, new highs on those as well, and perhaps closing high on the diamonds. As we said before, VIX was up. This is the VIX futures, still relatively low in its pattern. It was up 2.41%. And you could see the dollar is really oscillating around that line. And if I was to change that perhaps to a weekly chart, you could see that the dollar is significantly off its highs. Might be the place to expect it to bounce from, however. If we look at commodities, gold and silver have been super strong. When you look at a day like today, let's just open up gold. You could see it opened up here, closed down here, got as low as down here. Is gold ready to take a pause? It might be. I still think it goes higher considering we're easing into the setting of a good economy with inflation. And obviously the unemployment numbers and the lack of new jobs is probably driving those cuts. My guess is it goes higher, but could we consolidate a bit here? Certainly. Would that be bearish? By no means. And you see gold was down on the session 0.35 after opening considerably higher. Silver with a similar pattern. Oil has broken down below the 200. Natural gas is trying to break out above the 50. And then if we look at the rates, both the 10-year and the 30-year, we're down a bit today. And that is a good thing if you're long, down 0.5% and down about 0.5%. I look at 5% as the danger zone on the 30s. When it's going down, my portfolio of stocks is typically going higher. If we look at the buckets, the gray bar tells you where it was yesterday. The white or green is where it's at today, or red. And what do we see? We're kind of bunching up in the middle, reverting to the mean. We've got gray bars here and gray bars here, meaning you have less stocks above and below their Bollinger Bands across pretty much all the ETFs than they did yesterday. While you look at something like the Russell 2000, even though it led today, 17% of the stocks are below. That is not so below that this is a signal. I would look at this as neutral to getting oversold, but not oversold at this point. And that's what I would leave the buckets alone. Market breadth. This is the NYSE on the left, the NASDAQ on the right. And what you could see is the NYSE opened up about where it closed, traded lower, then much lower, and closed below the open. Thus, it's a small down day on the NYSE. And notice that I don't have the volume printing for whatever reason. I can tell you on the markets today, volume was a little lower than normal. No surprise with Yom Kippur. I still see the new high, the stocks above the moving averages falling on both. The NASDAQ set a new intraday high today on the composite and probably at a new closing high as well. And again, you don't see the stocks above the moving averages spiking with these new highs. If we go over to the breadth, market breadth, new high, new low, and I've asked Praveen to push this to everybody. What bothers me is we got the Spider, we got the NASDAQ Composite, the Russell, and the S&P 1500. All of them are at or near new highs. Yet stocks above the moving averages, maybe a little bit increased on the spiders, but falling everywhere else. You look at the AD line here on the NASDAQ and the Russell, clearly is not coming up. We've got significant divergences. So my gestalt then on the markets is I'm not going to be short here. I wouldn't mind raising a little cash as we go higher. Right now, I'm pretty invested and pretty happy to be pretty invested. But I do think that we're in a market where risk could certainly increase, at least for the next couple of weeks. Seasonality has turned around and is better for us, and that's a good thing. From a broad-based view of sectors, I look at my ratio charts, and what really stands out to me is this one and this one. Technology and healthcare are both super duper strong. And that's where I've been putting most of my bets. I'm a top-down guy. First, I make my assessment on market direction and then how much participation I want to have. Then I look at what are the leading sectors and industry groups, and then I'll find the leading stocks in those groups. The JAS layout, which is where I do my work at, has tonight 3,831 stocks. And for those that are new, that would include stocks that are the NYSE, the NASDAQ, and the Amex, and specifically stocks that are above $1 and above 100,000 shares. It will fluctuate some with the markets. If I go into my top-down view, I've got all those put into sectors. And if I look at the sectors, I can see technology, materials was here, and cyclical. And healthcare was in fourth place. I'm going to leave off cyclical and put healthcare in there. And then I'm going to look at percentage moved by the industry groups. And what I'm looking at are the industry groups that are in from those sectors. So let's go one. Let's be fixed. 1, 2, 3. When I say has to be fixed, it means it's either a new ticker or it needs to be put into the right industry group and sector. 375 groups in the top 10 industries and the sectors I picked. If I come in here and I quickly filter them for price and volume, it leaves me with 225. I like to rank them by the number of impulse indicators. And let's take a look at them. And actually, let's add one more filter, which is called pullbacks and uptrends, so I don't get stocks that are too far ahead. So YMMF, it's in an uptrend. It's a little wide for my taste. Pulled back and is breaking out above the 17-day. CPR, volume breakout momentum, RS about to cross. FICO, you deal with them, Fair Isaac, when you buy a house. And look at the stock price. I don't usually look too much at $1,700 stocks. Bentley Systems is one that had a beautiful trending run up here, has been basing, had a nice breakout today with that's a John Person buy, that's a separate add-on to my product. High volume, and you had a gap volume breakout momentum coming out of a squeeze, and look at the power break on that RSV and on the RS and the OBV. I like BSY. Sound, I don't know how much of a story stock this is. I've been in and out of it. It's an AI stock. I don't think it makes much money. Yeah, it doesn't make any money, has nominal amounts of revenue, trades at a big PE. And this one's in a little bit of an uptrend, had a signal today. I wouldn't recommend something like that, too speculative. OXO, I'd rather buy it when it breaks out above the 50. Poet is a technology play I once owned. You could almost imagine a cup and a handle and breaking out. This might be one to look at. It's a cheap stock. It's not extended by any means. Volume coming in, lots of blue dots, relative strength in OBV. NVTS, a semiconductor stock. These are leading the market. This is one that's a relatively cheap one. NTR, Nutrien, had been in a big uptrend and a pullback and is about ready to resume that. And we've looked at patterns similar to this a few times of late. This was a pretty powerful move, a bullish engulfing pattern, and it wasn't because it's not below, but a big, powerful day. And I'd want to look at the news. And the news says cost savings drive, fertilizer giant is the better pick right now. So it's a fertilizer story. I don't know fertilizer except, um, so I'd be careful. I'd have to read about it some more. Another technology stock like this one as it moved up above the 50. That's a pretty stock. Uptrend, sideways move, pullback near the 50, and a breakout CRML, a lower cost stock. So I will do this and I will run from a top-down perspective so I can look at the best sectors and the best industry groups. I also like to do a bottoms-up view, and I'm just going to do that very quickly, where I'm going to go and reset the filters, and I'm going to look at my 2-day momentum signal, which is my go-to price and volume limits. Let's buy things above the 200. Let's hit OK. Let's take a look at these very quickly. AER, AirCap Holdings, um, steady Eddie on earnings. Multiple of 9, dividend less than 1, had some earnings surprises. So sideways move and trying to break out. If we look at a weekly, weekly shows it's in a nice move. So this might be an opportunity to buy it on a pullback. What are we searching for in this? And that's interesting. We're supposed to have 2 momentum dots, and that is a daily. I got. There you go. There's your 2 dots. All right. CRML. Breaking out here, critical medicals. There's the 2 dots. That's an interesting pattern. INSM. Nice uptrend, sideways move, little pullback and breaking out. MicroStrategy, very much tied to Bitcoin. If Bitcoin goes higher, then this probably goes higher with it. Poet, we looked at before. Breakout here. PRKS, United Parks and Resorts. Don't know anything about it. Does it pay a dividend? No dividend. Spotty earnings, probably related to a cyclical business. SHLS, Shoals Technology, and these are all, this is a solar play, But notice that it's got the two dots. Look at the RRS and the OBV. It's a pattern I like to see. Snowflake, a big stock making our list, still kind of sideways going, but is something happening here? STRC, not much to say. UPXI, don't know this stock. It's a cheap communication stock. And VVPR, Vive Power. You know, when you see the double dots, it makes me want to believe this is the start of something, but this has been going so sideways. So when I think about these, let me very quickly look. Similar story there. INS looks interesting, and so did CRML. Now, because I was set up to look at 4-day charts, not single day, let me just go back into the top-down view just to make sure I didn't miss anything. So technology, materials, healthcare, and one. Now you're going to wonder, why are there only 5 things? Because I got my filter on. Boom. So again, let's go put pullbacks and uptrend. Let's do $5 and 500,000 shares. Hit OK. Let's rank it by up and just quickly look at these and see if anything looks different. Yeah, the charts look different, but I'm seeing there's a, all right, BSY looks good here. It looked good before. Uptrend pullback, nice break above the 50. It's getting included, I think, into the mid caps. Lots of volume. I like the relative strength. SOUN, I was not a big fan of. QXO, no. Yeah, so I guess we were looking at the right charts. So on that note, I'm just going to leave you. Be careful here. If I had to pick, the one I'm going to work up is probably BSY, and then that metal stock. Let's go back to the top down picture. The CRML, and I think those would be the two that I'm going to focus on. Have a great day in the markets. Come think about coming live. Sorry, I'm kind of tired tonight. When you don't eat all day, watch services. Um, it shows when it gets to 9 o'clock. Have a good one, everybody.